Good morning, and I wish you have a very good day today. We are honored to present our topic, Taxation of the Leasing Industry in Malaysia, Current Issues and Outlook. This presentation is brought to you by Muhammad UZAIR bin ZAMRI, myself, Muhammad FITRI bin ROSMAN, Muhammad EKHZAL bin ADRI, Muhammad HAFIZ bin ZUWARI, and AIMAN NADIAH binti Muhammad ARMAN. First and foremost, we would like to extend our gratitude to Madam Siti HAWA binti SHUID for guiding us and giving us the opportunity to explore this important subject. Today, we will discuss how the leasing industry in Malaysia is navigating a rapidly changing tax landscape. Our presentation will highlight the current taxation issues affecting leasing, examine the implication of these changes, and provide an outlook for the industry moving forward. Moving on to the definition of leasing and its current relevance. Leasing is a contractual arrangement where one party, the lessor, grants the right to use an asset to another party, the lessee, for a specified period in exchange for periodic payments. Instead of making large upfront investment, companies can obtain essential assets like machinery, vehicles, or technology through leasing arrangement. This approach helps businesses manage their capital expenditure more efficiently, freeing up cash flow for other operational needs. Leasing is vital in sectors such as manufacturing, transportation, and technology. In these industries, access to the latest equipment is essential for staying competitive. By choosing to lease, businesses can regularly upgrade their assets without the financial burden of outright purchases.
The Malaysian taxation landscape for the leasing industry is undergoing significant changes, especially when the recent expansion of the service tax or SST. Firstly, starting from 1 May 2025, the scope of SST will be broadened to include more business-to-business services, such as fee-based financial service that cover leasing transaction. This means that a wider range of the leasing services will now be subject to tax, increasing to overall cost of doing business. Both leasing companies and their clients may face higher operating costs as a result of this change. Secondly, a new dividend tax will be introduced in 2025. For the first time, individual shareholders receive dividend income exceeding 100,000 ringgit per year will be subject to 2% tax. This will directly affect the investor in leasing company, reducing their net returns and potentially influencing the future investment decision in the sector. Thirdly, tax compliance is also becoming more complex. Leasing firms will need to adapt a new reporting requirements such as mandatory SBRL filing and self-assessment for the stamp duty. These changes demand enhanced tax administration and greater attention to compliance, adding to the operational challenges faced by the company in the industry.
The recent taxation changes in Malaysian leasing industry have wide-ranging impact on different stakeholders. First, businesses, both leasing companies and lessees, face increased costs due to the expanded service tax on leasing services. This rise in operational expenses can squeeze profit margin and may lead to higher lease prices for consumers. Small and medium-sized enterprise (SME), which often depend heavily on leasing to acquire capital asset, could be particularly hard hit by these cost increases. From the government perspective, the expansion of the SST base and the introduction of the dividend tax are designed to boost tax revenue and broaden the overall tax base. These measures support Malaysia's fiscal sustainability goals. However, the government must carefully balance this revenue objective with the need to maintain a healthy environment that encourages industry growth and investment. Investors and shareholders in leasing companies are also affected. The new dividend tax reduces their after-tax return, which might discourage investment in the sector or cause investors to reconsider their preferences. Finally, consumers may feel the impact indirectly. As leasing costs rise, businesses might pass these expenses down the supply chain, resulting in higher prices for goods and services financed through leasing arrangements.
The leasing industry in Malaysia faced several notable challenges amid recent taxation change. Firstly, there are ambiguities in how the Expand Service Tax or SST applies to bundle, leasing and financial service. This lack of clarity complicates compliance effort for leasing companies as they struggle to interpret the rules and correctly apply the tax to complex transactions. Secondly, the introduction of new tax reporting requirement and self-assessment regime has significantly increased compliance costs. This demand places a heavy strain on leasing business, particularly smaller business that may lack the resource to manage the heightened administrative burden effectively. Lastly, the implementation of the new dividend tax is expected to encounter resistance from investors without clear and detailed guidelines. Dispute could arise, adding uncertainty for both leasing company and their shareholders. For future, key developments are expected to shape the taxation landscape for the leasing industry in Malaysia. Firstly, the government plans to engage closely with industry stakeholders to find the right balance between service tax rates and exemption. This may lead to adjustment in SST rate, specifically for leasing service, aimed at supporting the competitiveness of the sector while ensuring fair tax revenue collection. Secondly, there is potential for the introduction of strategic investment tax incentive or credits. This measure would encourage growth within the leasing sector by promoting capital expenditure and investment, helping businesses expand and modernize their asset base. Finally, the government is also moving toward digitizing the administration process. This digital transformation is intended to streamline compliance, reduce administrative burden, and improve efficiency for leasing companies, this managing their tax obligations.
Before we conclude, we would like to acknowledge these urges that have informed and supported our research for this presentation. Our references include key publication and budget analysis from leading firms such as BDO Malaysia, Crowley Malaysia, Deloitte, EY Malaysia, PwC Malaysia, Roll & Partner, and Tritax Sdn Bhd. We also refer to official documents from the Ministry of Finance Malaysia. These sources provide valuable insight into the latest tax measures, industry challenges, and a future outlook for the leasing sector in Malaysia. For anyone interested in further details, the full list of reference can be found on this slide. In conclusion, understanding the taxation framework surrounding leasing in Malaysia is essential for the businesses aiming to optimize both cost and compliance. Recent tax policies such as the expansion of the service tax and the introduction of the dividend tax have significant implications for the leasing sector competitiveness. These changes affect operational costs, investment returns, and overall business strategy. Ongoing reforms, coupled with active engagement between the government and the industry stakeholders, are crucial to strike a balance between generating necessary tax revenue and fostering sustainable industry growth. Ultimately, awareness of these tax developments and the ability to adapt proactively will empower leasing companies and investors to navigate Malaysia's evolving tax landscape effectively, ensuring resilience and continuous success in the sector.